Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, September 16, 2016. Stocks are attempting to stabilize this week, and we have several very important events coming up, namely Federal Open Market Committee and Bank of Japan both have interest rate decisions on September 21st that will be felt in the United States. Bonds and dollar will look to FOMC BOJ for direction, so will actually the dollar index and by extension gold. Oil lost for the week again, and I think it's still a long-term bearish security. While natural gas actually is attempting to go to 52-week highs, and it is bullish. And we'll look at wheat, and I just read an article about an interesting thing, vomitoxin, and how it may affect wheat prices. Okay, so this is S&P 500 ETF SPY. Last Friday we had a gap down, and run lower below the 50-day moving average. But look, you can see immediately we had very strong buying candle the very next day. And actually that makes sense because you could see that one way of looking at this, we're basically at breakout level. There's a breakout level at around 210, 211. So, you have limit orders being executed at breakout levels. I wanted to show one indicator that I kind of like to look at, and that's intermediate term breadth momentum oscillator, which is an oscillator of the advanced decline line. And finally, we're getting into a negative territory, and this hasn't happened since February. So maybe that will indicate we're getting some sort of a deeper pullback, and maybe we'll see a continuation of this pullback. I don't know where, but an obvious target on the downside would be around here, or maybe we may not even get that deep of a pullback. Maybe we'll get a little bit more, and then people will just start buying again. I think generally speaking, S&P 500 is very much bullish because these are all-time highs. This is S&P 500 still at 5, so we're very much bullish. We haven't even pulled back from the high strong readings. Down below here, of course, we are getting some sort of a pullback, so it makes sense that percentage of stocks above the 200-day is decreasing. But I think that we're still well in the bullish territory. Maybe we drop to below 40, then we can say, oh, okay, maybe we're getting sort of a bearish signs, but not even close. We are still at 64. The same thing goes for the bullish percent index. We're still at 70. We haven't even pulled back to below 50. So for the long-term picture, I think we're still very much firmly in the bullish camp. So if I was trading this, and I am trading this, I will only be looking at buying this chart. This is S&P 500 on the weekly time frame. You can see we came down to the breakout level. I kept pointing this one out right there, and people started buying right there at the breakout level, which makes perfect sense. Volume was pretty good too, so this could indicate we are already pretty much at where the prices will go. Maybe that's as low as it will go. This is good level, good volume here. And look at QQQ. We came down, and then immediately we had a bullish engulfing right there on Monday. And then we're again very close to all-time highs. We just kept pushing higher. So there's a lot of interest in buying stocks. QQQ is higher beta stocks, but still it is a very good indicator of good appetite for risk. Now, I think it is a bit overextended. I think we may get a deeper pullback, and my cursor is right there. This is a breakout level right there. So we may get a pullback around that area, and it would also make sense that buyers will step in around that area. And the same thing here. Here's that ITBM, intermediate term breadth momentum oscillator. We're finally in a negative territory. I think there was a small foray here during the Brexit, and look how that turned out. So that's maybe as far as we'll go. But again, I think that we are a bit overextended, so I think a deeper pullback for QQQ is entirely in the cards. Here's IWM, the Russell 2000 shares. This one didn't really even correct that much. It was a bit of a, just a blip basically, because this was an enormous move, and ITBM is not nearly, nowhere near to the negative territory just yet. So I think we may see a deeper pullback for IWM, QQQ, and probably by extension S&P 500. So I think we may see more correcting for S&P 500 before an uptrend will resume. And here the broader NYSE Composite Index. On this chart, you can't really trade it, so this for informational purpose. But on this chart, I wanted to point out that we're finally getting a little bit of 52-week lows trickling into the equation, and you can see that we hadn't had any new highs were always outnumbering new lows since the beginning of March, since here. And now we're finally getting a little bit of new lows outnumbering new highs by a small percentage here, just this week rather. But again, generally speaking, I think this is a bullish chart. Look at the all right, before I get to bonds, I want to show some of the more interest rate sensitive sectors and stocks than compared to other sectors. So here's one, which is XLU. This is utilities, one of the more sensitive interest rate sensitive sectors. Came down rather hard here, but these are all-time highs, so this is normal. We're coming down off all-time highs, and I kept saying that I would never be buying up here. We need a pullback before we can contemplate re-entry on this on the long side. So looks like we are stabilizing, and in decent volume too. So XLU looks good. This is one of those classical situations when we have a bullish security within a bigger uptrend that is somewhat oversold. Here's IYR. This one is of more concern to me. This chart is still, it's more concerning than XLU, let me put it that way. Because we had this big gap, a continuation lower, and this week we didn't really stabilize that much. You can see that we had a big volume last week, but then even this volume was exceeded by further selling. So maybe we'll see further consolidation. And like I said, we have three events basically this week. We have Bank of Japan interest rate. This will actually happen overnight because Japan is ahead of us. So on the 21st there will be two events: the FOMC interest rate decision and Bank of Japan press conference together with the rate decision. There's also initial jobless claims on the 22nd, but it's a lesser report. Anyways, real estate, again, these are all-time highs, but if we look at purely support resistance, you can say that this is already a support. This is a previous peak breakout above previous resistance, and now we are retesting this breakout. So it's normal process of back and forth basically. However, again, real estate is more interest rate sensitive than other sectors. So maybe when we see a decision, maybe it's already been priced in to the real estate market. Okay, here is XHB, and this is home builders, diversified home builders. Same thing as real estate. You can see there was a big drop, an attempt to go higher, but it was sold off. So, I think this is again also looking to the bond universe to, for direction. And there is a strong indication that the interest rates will actually be lifted this meeting. Okay, here's TLT, 20 plus year Treasury bond fund. This is the most interest rate sensitive bond fund out there probably. Big drop here on last Friday. The significant selling pressure here on big volume. And as I said, we have interest rate decision coming up. So basically, this fund will look to that decision to see where, to look for direction. Right now, I don't see much buying pressure just yet. However, we did close a gap, and I kept pointing out this big gap here, this gap, and also this gap. Well, this gap got closed. So there is this gap that was basically closed just this week. There's a smaller gap down here, so I think we may see a correction further, especially if they decide to lift interest rates. Is this an all-time high, a reversal of the all-time highs, and now we're going to see lower interest rates? I have no idea. The interest rates have been going down since the 70s, or I believe. So I don't know if this is indeed the ultimate peak that bonds will have reached. Okay, here's TLT on a weekly time frame. Here I showed this big pattern of possible cup and handle. So we have 20% that's possible we could move up, but the small handle here we had 6.1%. We basically advanced that much higher, and now we are correcting. It's possible that this is a falling wedge, so I can actually redraw it right now. It's really, difficult to see it before it actually happens. So it's possible this is a fallen wedge of some sort, and maybe like a flag. So this is a flag. And if this is indeed a flag, we could see a breakout to, above, let's say, a close above, let's say, 140. And then we could see further follow through to all-time highs. An alternative scenario as this is that this is indeed an all-time high that will be ever reached, but this will only be known in the rearview mirror. Here's AGG, the diversified bond ETF. Same picture, not as volatile as TLT. Here we have two more gaps that are still unfilled. There's one gap right there and another gap right there. So maybe the interest rate decision will cause these two gaps to be closed. It's possible. This is a very steep advance, and it's possible that we're going to come back to the 200-day moving average. Here's the HGG on the weekly time frame. I pointed out this depth of this pattern. It was duplicated on the upside. Maybe this is a flag pennant, and again, if we break out, let's say above here, about 112.75 or so, we could see further follow through and fresh all-time highs. Alternative scenario, like I said, we could correct further down. All right, moving on to the Forex Universe. This is US dollar on the daily time frame. So not much has changed since last Friday. There is still resistance up here and support down here. 94 support, 96 resistance. So, but there is this big candle on this Friday, so we could possibly see follow through here and maybe a breakout. And you can see that British pound is kind of attempting to move lower again, and yen is stalling, and maybe euro has rolled over also. Here's a weekly time frame for the same chart. I think this is a bullish chart. Maybe this is a double bottom, and maybe we'll get follow through, and especially if we get to 100 and a breakout above 100.60 could be extremely bullish. We could see a move of depth of this pattern, which is 9%, or we could see a deeper move. Maybe we can see a move of like this entire pattern duplicated on the upside. So we could see major follow through for the dollar. This would be extremely bearish for euro, somewhat bearish for Japanese yen, and very bearish for British pound, of course. So let's look at the US dollar versus the Japanese yen. We're still at support. Here I thought we had a support break, but maybe it was just another market maker maneuver, and we kind of rallied off support. So maybe I think we're seeing a reversal in the direction for the US dollar versus Japanese yen, because it was clearly bearish here in favor of the Japanese yen for most of about a year now, and now maybe we're seeing a reversal signs here, because it looks like we're trying to bottom here, and then the US dollar will gain as a result. Here's the Japanese British pound versus the dollar. We were very oversold here following the Brexit conundrum. Oh, the conundrum, Brexit, whatever you can call it. Bottomed out here more or less, and then rallied. Now, I said that we're possibly going to attempt to retest these levels here at 1.383. We got to 1.344, so there is a little bit of upside that it's still possible here. But generally speaking, I think this is a bearish chart, so I would be, if I was trading this, I would be shorting it. And finally, here is probably the most important one, is the euro versus the US dollar. This one, I said that maybe we'll see a retest of this area here between 1.17 and 1.145 or so. But I think this is a bearish chart. So because you can see a big drop, sideways consolidation, and then we may see a follow through lower. Just imagine for a second that this is not a weekly chart, but this is a 1-minute chart or a 5-minute chart. You would be, well, I would. All right, and of course, if the dollar is going to be gaining, gold could come under pressure. So this is gold on a daily time frame. maybe these are lower lows, lower highs rather, and maybe we will see. It's hard to say. I mean, I think this is a bullish chart, so if this is indeed lower highs, this could be like a triangle. Uh, these are the lower boundary of the triangle at one point at 1310 or so, 1305, and these are the higher boundary of the triangle. So if we get a breakout here, maybe to 1360, close above 1360, maybe we could see fresh 52-week highs. Alternative scenario is these are indeed lower highs, and if the dollar gains, then gold will break this support at 1305 and head lower. Next stop, of course, would be 1252, and another stop would be at 1200. Now, if it gets to 1200, um, right now I think we're in a bull market for gold, but if we get to 1200, we may need to completely reevaluate the entire new bull market premise. Here's a weekly time frame for the same chart, gold continuous contract. So here's clear support at 1300. The reason why it's clear is because you have several things happening there. We have this 2015 high, another high here in April, a breakout, and another touch right there just 3 weeks ago, and looks like we're heading for another retest of that $1,300 level here this coming week. So a break below this week, especially a close below 1,300, could be significantly bad for gold. And this week I think could be critical because of the interest rate decision. Should the Fed decide to lift interest rates, dollar will most definitely gain and against other currencies, and gold just despises good strong dollar. As a matter of fact, here's that chart I want to show, and the inverse relationship between gold and US dollar is quite clear. But occasionally you do get a foray into a positive correlation. So this is a correlation coefficient here, and sometimes you get positive correlation. So in other words, the green here is the dollar index, and the yellow here is gold. So sometimes you have both gold and dollar going up together or down together, but most of the time they go the opposite directions. So right now we have one of those times where gold and dollar are somewhat positively correlated. In other words, both gold and dollar are going up. Now you can see that these are not normal occurrences. Normally we are negatively correlated. Okay, here's the gold continuous contract on the weekly time frame. For the record, again, I said that we have a new bull market in gold, and this is according to one of my proprietary indicators, GBI Gold Breadth Index, that flipped into the bullish territory in March of this year. Again, we'll see where it goes. We have one of the, this is a 1 to 4 scale, and GBI dropped to 3 a few weeks ago. So um, we could look at it from a point of view of maybe now is a good time to buy. But alternatively, you can look historically here when it dropped here to 3. Eventually, it dropped below this red line, and that is a bear market. And this rally, I would have shorted it already. And here's GDX, gold miners ETF. Same thing here, gold breadth index. It's the same line as well as I just showed. So very large move here. This is almost tripled of the all-time lows here at around $12. So extremely overextended, and I kept saying that I would never be buying up here. Now, as far as the breadth, we have breadth for the gold miners. For now, I did not see a break below. Sometimes breadth leads the actual price. I don't see it just yet. Maybe on balance volume is, breaking below previous low here, but it's possible that this is it. Maybe this is as far as GDX will go, and maybe we'll get a rally from here. And here is GDX on the longer term time frame. Same thing here with gold breadth index. We're coming down here, and we'll see if this is a buying opportunity. Okay, and moving on to the hard commodities. This is light crude oil in the daily time frame. Yeah, on the daily time frame, it's kind of hard to see. So let me go to weekly. This one, I think it's a bearish chart still. Resistance here at the $50 area or so. So looks like the selling actually came a little before we got to 50, around 49.30 or so here. And the sellers already stepped in here. We'll see where this goes, but this week, for example, we actually closed rather, this is a rather bearish looking a weekly candle. So, there is support, resistance. So for now, it's kind of like a trading range between, $40 and say $50. But I think this is a bearish bias still, so I would be only looking to short this chart. Conversely, this is natural gas, and we are attempting to go to 52-week highs. In fact, this week we came very close to 52-week highs again. So I think this is a bullish chart, I think, in my opinion. Here is the weekly time frame for the same chart, and I kept pointing this one out. We had a breakout above $2.50, 52-week highs, pull back to the breakout level, and another bounce off those $2.50 level. And I think we could just break out of this to fresh 52-week highs. If we do break out, then we can look for a target so that this is about 17%, the depth, 16-17% depth of this pattern. Let's be conservative, so 15% breakout would be around here, which again makes perfect sense because it will put us in this gap area from 2014 and the broken support here, obviously. So if we break out here to fresh 52-week highs, yeah, I would be looking to for a move to around here, to around $3.60. And finally, I was reading an article over the weekend. You can see I have nothing else to do. So I found an article about the wheat prices and vomitoxin, which is a toxin that attacks, well, it's a toxin that's found in a wheat, and some wheat by extension is being rejected, and it's not being used, for pasta and stuff. So I thought, that makes sense, and maybe the prices of wheat will finally stop going down. So I pulled up a chart of wheat, and this is a weekly chart, so pretty obvious. We just hit 50. Well, these are multi-year lows, really. 3 weeks ago. So in fact, let's just see how many years. This is 10 years. So these are 10-year. This is, so we got 386 here. So these are 10+ year lows for wheat. It's possible we're gonna stop here, especially if we get some kind of a toxicity, and some of the wheat will be rejected. But in any case, for now, I don't see this news being reflected in the price of wheat. And I think that the reason for that is because we still see huge harvest for the wheat in the United States, and by extension, the prices are moving lower. Anyways, if you like what you're seeing and hearing, please consider signing up for my service. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now, so please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at, potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the success as trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members. So that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right. Thanks for watching, and please consider signing up for the trade alert services. Bye-bye.